Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special investing report brought to you in association with ASB. Over the last week or so, banks and others have been cutting their interest rates on term deposits and debentures. We're now seeing term deposit rates across the banks are down around 3 to 4%. And for finance companies, debentures around 6 to 7%, particularly for the sort of 1 to 2 year periods. People are now asking, is it really worth putting your money into a bank or a finance company with interest rates this low? And what's going to happen over the next 6 to 12 months as interest rates keep falling? Remember, we've got the official cash rate at 3.5%, and it's likely to fall to at least 2% in the next 6 months or so. So we could be looking at term deposit rates in banks and in some finance companies at around the 2 to 3% mark. It really is something we haven't seen for a long time. So what can people do to improve their yield? And what sort of risks can or should they take? I like to look at this from the point of view of my mother-in-law. So please don't take this as financial advice. You're really just eavesdropping on what I tell my mother-in-law when she comes to me and says, what should I do with my money? Well, there's a few choices around at the moment. It's interesting that a lot of big companies are going to retail investors, mums and dads, and offering corporate bonds. Fonterra is going to come to us next month with a bond issue to raise over $300 million. Auckland Airport, it's already done one, as has Wellington Airport. The Auckland City Council is planning to raise over $200 million, and Genesis Energy too will look to raise hundreds of millions of dollars from mums and dads. It's likely they'll offer around perhaps 7 to 8% for their corporate bonds, and they'll have a maturity of 2 to 3 years. Some people will ask too, should they put their money with finance companies? Well, this is an interesting question. Although many of the finance companies now, in fact, just about all the ones you'd really consider putting your money with, have a government guarantee. But this government guarantee expires in October 2010. Remember, that's next October. And no one's quite sure about what will replace it, or whether there will be any replacement at all. And of course, most finance companies don't have investment-grade credit ratings. In fact, there's only 3 that do, one of which, UDC, is owned by ANZ. Merrick and South Canterbury have what they call a BBB- investment-grade credit rating. That's the lowest possible investment-grade credit rating you can get before you're called junk. And the rest are rated as junk. That's the phrase that's used in the financial markets to describe someone who doesn't have an investment-grade credit rating. And remember too, today we've heard that Capital and Merchant Finance, one of those finance companies that's frozen and in receivership, its investors will now get back nil, nothing from the money they had in there, over $167 million lost. So there are some risks with finance companies, particularly out beyond October 2010. Beyond then too, we should know from all the finance companies what their credit rating is. The Reserve Bank is currently going through the process right now of ensuring they all have credit ratings so we can more accurately measure some of the risks. On the corporate bond front, it's best to be a bit careful there too, because they aren't guaranteed by the government. You're really making a judgment about the financial viability of a company, which isn't the easiest thing in the world to do. Fonterra, the Auckland Airport, Genesis, they all sound like great companies, and in many cases they have very strong credit ratings, and 1 or 2 stronger than some of the banks you see in New Zealand. But there are still are some risks there. We are, though, seeing heavy inflows into finance companies, and in the last quarter, in the December quarter, more than $500 million extra was put into finance companies. So many New Zealanders are starting to renew their faith and their confidence in finance companies. Of course, the government guarantee helps, but something to be careful of. There we have it. I'm Bernard Hickey. That was a special investing report brought to you in association with ASB.